There is plenty of focus on interest rates in the US and Australia as a COVID hangover starts to trail off. But what does it mean for your investments, repayments, and, if you're lucky enough, savings? Joining us now to discuss from Sydney is Andrew Woodward from the Investors Way. Great to see you here on Ticker again.
Hi, and good to be with you, Aaron.
All right, there is so much news around interest rates at the moment, and they are starting to come down in the US, starting to see some positive signs in Australia as well. What do you think this means broadly about the state of the economy?
Well, I think it is a reflection of the fact that the economy has been rather stagnant, if not going backwards in Australia in particular. And so there needs to be some stimulus injected into the economy to get us spending again and to get some growth back into the economy.
First rate cut in 4 years. Obviously, we've been on a roller coaster since 2019. I mean, I remember interviewing people back in the latter half of 2019 before we'd ever heard of this thing called COVID, where we were talking about quantitative easing, as in rates below zero. Then all of a sudden rates drop because of COVID, and then rates go up to try and deal with inflation. Did they stay up for too long?
Look, I have been saying that for probably 6 months now, that I believe that rates have stayed up too long. This fear of inflation has caused a delay in bringing rates down, which ultimately has seen our economy almost grind to a halt. If it wasn't for government spending, we'd be in a technical recession. So yes, absolutely, I think they've stayed up too long.
So what happens from here? If you are an Australian who has a mortgage and you have been really struggling, I mean, over the Christmas dinner table, obviously everyone talks to each other, how you going? Some people paying thousands of dollars extra just on the interest to get by at the moment. Should they be trying to keep those repayments as they are to get ahead of the mortgage, or does the economy need people back spending again?
Well, I think it's going to be a very much a circumstance type scenario. But yes, one of the ways that people can get ahead again and build up their buffer, which they had throughout the COVID period in their mortgages, is to keep their repayments where they are. But it's also important to understand that there's only a third of the population who have mortgages. And the majority of those people are ones that have been under a lot of financial stress because of the rapid rates that increased over a short period of time, 18 months, 13 increases. It really did put a lot of people under pressure. And so I just think the rate cut is going to see people take a big, deep breath and exhale a little bit to say, thank goodness, a little bit of relief. I don't see it leading to the massive spending that everyone's fearful of.
Yeah, and that has been the concern, obviously, for people's ability to borrow. I've spoken to people who sell houses for a living and they say, we've been so flat out, I'm terrified of what will happen if rates will start to come down. What do you make of that?
Well, that's another interesting thing, because the theory is that if rates go up, property prices slow down, and if rates go down, property prices go up. Well, what's been happening in the last 18 months is property prices have been going up. So that theory kind of goes out the window. And I think we've seen auction rates or clearance rates have been falling in recent times. And generally speaking, when I'm talking to people in that space, the market is relatively soft. So I don't see a property explosion, even if we have more than one interest rate cut, because people have just been under so much pressure that they're not going to just rush out and start spending any excess cash on more property.
The RBA chief there, Michelle Bullock, has a pretty tough job ahead of her at the moment to making these decisions. And it's not just that first rate cut, it's how many there will be. Some market analysts and economists suggesting there could be 4 or 5 by the end of the year. Do you believe that?
No, I don't think there'll be 4 or 5 by the end of the year. 4 within 18 months would probably be a great outcome for people who are looking for rate cuts. But I think this first one is really just going to be a dip in the water and see what happens. I don't expect we'll see a flurry. They're going to wait and see what impact each of these things have, and obviously the global economic impact that's going on around the world with all the different tariff conversations. So there's a lot going on, and it's a tough job to have right now, especially as we're coming into an election as well in this country.
Yes, and that is a key point. We all remember 2007, where the RBA decided to lift rates as the election, I think it was underway from memory, and it was seen as one of the final nails in the coffin of the Howard government. How do you think this rate cut could actually impact the cost of living crisis in Australia? Because according to polls, that's the #1 thing on people's mind when they go to the ballot, we're assuming in April.
Yeah, and that's right. And so the interesting thing will be if the cut comes in, as to what time frame will it be flowed on to to the lender, to the borrowers. Sorry, so it may not come in time for it to have much impact on the cost of living in the election cycle. So it'll have minimal impact, but at the same time, if one party wants to use it for ammunition, they certainly will if they can. But I just don't think the data will be out in time to say it's had any great impact on the cost of living.
What do you see as a potential long-term impact of a rate reduction on Australia's economy? Do you think it will give the consumer spending the boost? We hear about cafes doing it tough. We hear statistics that the government is denying, but for every Australian business that closes, the government adds a government worker. What do you think will be the long-term impact of a rate reduction?
Look, the long-term impact will be that people will, their confidence will change, particularly if there's a second one. And that will then lead to people, feeling more comfortable with spending some of that money, and therefore getting back to restaurants and getting back to spending on discretionary items, which have been the biggest thing that's been cut over the last few years. So, I think longer term, we need some rate cuts to build the confidence so that people can get out there and spend some money and help boost the economy.
And talk to us about Australia's monetary policy, how it, I guess, aligns with global economic trends. We've seen the Bank of England, inflation has been creeping up in some countries. It seems to go up and down, but still heading towards the right range. I mean, there's going to be a bit of a kind of bounce, right? It's going to keep going like jumping on a trampoline. Eventually you get tired of it. That seems to be where things are going. How long until COVID's so far behind us and the impacts are so far behind us? I mean, obviously geopolitically, you've got Donald Trump, his team trying to end wars in the Middle East, end wars in Ukraine as well. What do you think the impact of those could be on things like inflation and the global economy?
Look, the impact is huge, and at the moment the biggest problem we've got is uncertainty, because we just don't know what's coming tomorrow, whether it's more tariffs or exemptions from tariffs, new discussions about wars either ending or starting. It's just all over the place, and markets don't like uncertainty. So in order for us to get all of that behind us, the markets want some level of certainty, and so we really do need to know what is going to be the longer-term monetary policy around the globe, not just here in Australia, and to see what impact that has. But the more certainty we get, the more likely we are to see those rates come down more frequently.
Final question, big question, and just quickly, are things on the improve in the economy, do you believe? Do you think we have finally turned that corner?
I think we've turned the corner in taming the inflation beast. And if we can get a couple of rate cuts and build the confidence, I think, yes, then we've turned the corner. But it's on a very slippery slope if we don't get those rate cuts and we don't build that confidence and get that certainty back in the market that people want in order to have the confidence to get out there and invest and spend and do everything that is required to grow the economy.
Andrew, always appreciate your time. Of course, people want to get in touch. You have a fantastic business there. What's the business?
The Investors Way at theinvestorsway.com.au.